Ladies and gentlemen of the crypto space, we're live on a Friday, March 4th at 11:45 a.m. And what a heck of a day. Car broke down this morning. I'm literally still sweating from walking in the house. But we got a hot topic, and you guys need to hear some things and understand what we're doing, why we're doing what we're doing, these markets, this ecosystem, this software, and what it really is, and who are these developers, and what are they building. And we understand their motivations, a lot of them. But Andre's motivations were never directly about capital gains. He's a coder, he's a builder, and I appreciate that perspective. And code is elegance, code is poetry. And Andre's code was always poetic in many regards. It had a certain tone to it, uh, excuse me, a certain flow to the implementation. And there's purpose behind his contracts. Andre is not a UI developer, Andre is a contract developer. And he has three primary products at play aside from his start with Yearn, which is meaningful from an integral component to a robust financial system. You need you need the you need the you need the scavenger, and that's what Yearn is. It's the pure scavenger that draws capital out of a market, and that's good. You need that, and a successful market has effective psychological pressures to drive capital back into the market, and that's exactly what the curve-convex relationship established. Yearn's still farming the crap out of Curve, but there's enough psychological pressures between the synergy of the protocols to draw adequate capital back in, such that you have a relatively stable price point. When the price point of an asset is depreciating, there's a market imbalance, there's a trade flow imbalance, which is something I've been talking about. And there's not enough psychological factors at play to draw capital back into the market. And that's not a sustainable ecosystem. It's a speculative market. And when you have a speculative market that's purely based on price action, um, that's not a quality market to be involved with. So let's talk about Solidity. There's a lot of things to consider. Obviously, the price action is quite depreciative. Early on, it was speculative that it was being appreciated for what it is and what it does. And the price action is obviously representative of the fact that persons don't understand the tokenomics at play. What I understand at this point is that the contracts work as expected. There's a bit of questioning that was initially done pre-release regarding the emissions rate, but I think what is live is potentially breathtaking from a monetary policy standpoint, from a capital control standpoint, and from a integral component of a more robust infrastructure standpoint. It's the purpose of Solidly isn't for Solidly. The purpose of Solidly isn't for its stupid user interface. The purpose for Solidly isn't even just for the integration of it into other exchanges. Solidly has a critical component in fixed forex, which is tied in with Keeper. Um, and between with Keeper and other components, you can build very meaningful structured products on top of Solidly, which is options and derivatives and leverage, so on and so forth. And that's where Andre's Iron Bank comes into the picture. But with fixed forex, you have forex markets, and with forex markets, you need very considerate curves for particular swap rates, and solidly fits the bill with regard to its monetary policy, incentivizing much more alignment with the protocol and how cash flows through the system. So the most important thing that everyone is neglecting is that V33 tokenomics allocates all transaction fees to VENFT positions. Um, and the biggest thing that persons neglect when they take a VENFT position is that it's not a position. People see it as a position. It's not a damn position. It's a purchase. You purchased a bond, a 4-year bond, and it's clearly very volatile in price because the vast majority of market actors have no idea what the heck they're purchasing. But you're not purchasing an asset that can be liquidated. You're purchasing an illiquid asset, and you made the choice to purchase an illiquid asset knowing, hopefully knowing beforehand what you were getting involved with. And I damn well knew exactly what I was doing. I knew I was purchasing this because of the transaction fees and the bribes. High emissions rate, front loaded, is quite fascinating. It's going to mean there's going to be very limited supply. So, what drives capital flow into solid as the bribes? And the bribes come from transaction fees. So, as the protocol, as the exchange functionality is integrated into aggregators, it's already in Firebird Finance. Once it gets into Paraswap, maybe other protocols jump on 1 inch, like jump on Phantom, like a 1 inch and stuff like that. But there's no reason Spooky and Spirit and Beethoven can't benefit from the efficient, capital efficient swap rates of Solidly, which will drive capital flow through the protocol. Excuse me. That's probably the most important metric to assess short-term success of the protocol is the transaction volume. Um, and it could take time. Expect it to go down, expect it to go up, but point is, it's powerful, and the contracts work as designed. VENFTs are not diluted positions. Great. That's exactly why I took a position at various price points, and maybe I'll wait a little bit more, and that's probably what I would do. I probably want one more position, but I expect it to further depreciate. And you see it further depreciating. So I hope it appreciates, in which case I won't take another position. I have absolutely zero need to take another position. Um, but if it further depreciates, that just gives you that much more exposure, that much more percent ownership, fixed percent ownership of circulating supply, which means fixed percent ownership of voting rights, which means fixed percent ownership of the potential revenue that um, transaction fees and explicit bribes can provide. What do I know? First week was 1%. So that's 52% APR on the position. And guess what? It's the 52% APR on the price point of when I purchased Solid. So it doesn't freaking matter the price point because that's irrelevant. It's a non liquidatable position. Persons purchase assets in the crypto space for the completely wrong reasons without really understanding what they're doing. It's understandable. I could appreciate why persons purchase, assets, uh, but and I feel bad, and that's why I do this stream. I do this stream to peer through the madness, to really understand what the hell's going on, and that's exactly why on Twitter I talk predominantly about macro financials, because people are buying shit in the crypto space, and the entire macro financial system is about to shit the bed in so many regards. Every indicator, every historic indicator that it foreshadows a recession or some sort of cataclysmic liquidity event is screaming right now between inversion of the yield curve, the oil price spike. Everything is screaming pending liquidity crisis where there's a collateral shortfall and you get a liquidation cascade and it just ripples throughout the system, and that's what happened time and time again. 2020, 2018, obviously 2008, 2000. It's the same story over and over again as what happens in a leverage system. Except this time, the misallocation of capital is so much more pronounced. Rates have been zero. So the entire system globally has been forced to seek yield. And look at the teachers' pension fund, the 14 million pension fund that had capital in the Russian bank, and it's worthless now. They were what the hell is a pension fund doing with capital invested in a Russian bank? So they were seeking yield because they needed to produce as per the necessities of the pension. So the misallocation of capital is exposing all sorts of capital to risk that historically wasn't the case. And we're on the verge of some serious stuff. So when you're deploying capital to assets, you better have a goddamn good reason to do it. You better think something is special, something is different this time, and the price point isn't relevant. And that is overwhelmingly the way I think about capital allocation in these markets. I have a very carefully constructed portfolio, and I'm respective of my age. I'm respective of my portfolio size. Absolutely mission critical. If I had a larger portfolio, if I had 5x or 10x the portfolio size, I would be 70% risk off and 30% risk on. As of right now, I'm about 35% risk off, and the other half risk on. And You guys know the largest positions being Frax. I think that this price point is speaking for itself. Let's take a look at Frax real quick. And we could get back to solidly. I want to tell you guys how it fits into my portfolio, so maybe it'll give you guys insight into why I do the things I do. Frax, 112 million. Yeah, it's a good chart. I mean, look at this chart. So this is bullshit. This means nothing. This means absolutely nothing. That's called irrational exuberance. It's completely useless. But you're literally on trend and you're above price action zone of conjecture. You're turning previous resistances into support. The purple box, you're above support or above resistance. The top of the purple box was hit twice by resistance on the weekly, and it has breached above it 1, 2, 3 times. And we're currently above it. And let's see what it does. It's obviously a bear market, so I'm not expecting appreciation at all. But the strength of this asset, considering the macroeconomic landscape, is downright fascinating. So this is the largest position in my portfolio by far, and it was a very large FPIS airdrop. Yay! I look forward to that because I think FPI is technology that is entirely relevant to the macroeconomic condition. And we're talking about currencies. People are questioning currencies around the world, and we're not questioning the dollar because everything else sucks compared to the dollar, and that's a whole complex story, and that's a whole macroeconomic conversation. But the point is, I see this asset and I see what it's doing technologically as a synthetic dollar, as a euro dollar, and I understand its significance, speculative in regards, but also holy shit in many regards, how it has a place in this crazy ass system that we deal with called an economy, a global economy. And the other one is convex. Obviously, convex is probably depreciating today. Let's take a peek. It's a little bit more liquid. It clearly prints and has the bribe component. Yeah, it's breaking down, but it's still above. Let's see if it holds that bottom line. I'd like to see it hold that. And that's, you have a risk off. And when you have a risk off into support, but this isn't support, this is a previous resistance. So that's pretty cool to see. If this wicks down and holds this as support, that's a previous resistance flip support, and that's good to see. And guess what that means? When you see stuff like this, and you see this on the stock market charts as well, it basically means all of this, all of that was bullshit. It was complete irrational exuberance. And this is a price point where persons previously sold at and now think, holy shit, it's a good deal. So this is a significant price region if this holds as support. And, we'll adjust the story as the chart progresses. But this was all bullshit above, all irrational exuberance. Persons buying for the wrong reason. Persons misallocation of capital. Because they were literally looking at an asset and hoping it goes up higher so they could sell it to people that bought after them. Capital gains is the scavenger and the predator of capital markets. And I don't play that game. I want to own assets. I think like Warren Buffett. And putting all this stuff into perspective, those are the two assets that are the largest components of the portfolio. Frax and CVX for right reasons. They hit the curve narrative, so folks have questioned. I don't have a CVX CRV. You guys look. I have the chart up. I keep this chart up. This is one of the most important charts in the entire crypto space. But here's the kicker, and this is what most people don't understand. I don't need to have a position in this asset to be exposed to its narrative. I have complete exposure to this narrative, the curve narrative, vis-a-vis convex and frax. What do you think drives convex and frax? It's curve. It's what drives the whole system. And that's what's meaningful about it. And I've described it as an MMT currency producer in many regards, with balanced deflationary pressures provided by convex, which is in many regards, well, it's not a capital control, but it's a balancing of deflationary pressures, which is profound from a macroeconomic perspective, thinking about this from a central bank monetary policy perspective. We're talking about inflation, deflation, and all of these historic legacy financial descriptions of properties, of systems. And that's how we understand these protocols. This is big shit. This is big shit. And let's see. I have full exposure to the curve narrative, and that's the bottom line. Almost 45, 50% of the portfolio is exposed to the curve narrative. without actually owning curve. So solidly, this website sucks. You guys might chuckle when you hear me say that. Probably will. Um, Website clearly is not built by Andre. It's built by other persons. If you look at the GitHub, and that's just it's not what he does. Andre is a smart contract coder, and if you look at the contracts, they have effective unit testing, and they're robust, and they're also simple, and they're also elegant. For that on that note, if you look at the Frax contracts, they're actually really elegant. That's another story. So what do we know about Solidly? As I mentioned, bribes work, voting works, transaction fees go to bribes. I don't own any LP positions, so LP positions could probably add to bribes manually, which is cool. Yay, bonus. Um, from what I understand, rebasing works. Clearly, the UI does not present you with any meaningful information about its periodic nature. To my understanding, it's once an epoch, maybe when you lock the NFT, or maybe 1 week delay from the epoch. So we'll see what happens in that regard. But bribes are claimable. I've claimed all my bribes. The user interface is broken for certain LP positions. I'm able to claim bribes for like a Frax USDC. That works. I'm not able to claim bribes for FTM Tomb, which is the most lucrative bribe available right now. But it works using the smart contract. So what does that entail? That means the smart contracts work. That means this crazy ass monetary policy, this V33 tokenomics, is in play, where transaction fees for the LP positions go to the damn bribes. This doesn't exist in any other protocol. This is some crazy shit. So what does that mean? This means I want exposure to it. And I have exposure to it. What does this also mean? It means that the vast majority of people have no idea what the fuck they're dealing with, because they're buying some shit and everyone else is selling it and they're farm dumping it because they don't know what the hell they're dealing with. So what do I expect? I expect the damn price to keep going down. I don't care. I have a 4-year lock. It's irrelevant. I don't even account for this money part of my portfolio. I consider it an expenditure. It doesn't exist. But that's not the point. That's not saying like, oh yeah, I'm just. That's not like HODL, where oh yeah, I have conviction and it's going to come back up. No, this is a non-liquidatable position. It's like having a VECRV position, which you lock in perpetuity. You're not going to unlock it. No one in their right mind is going to let their voting escrow draw down to zero over 4 years. You want to lock it. Why? Because you're getting paid $5,000 a week in bribes. VECRV is one of the most lucrative positions I've ever purchased. And at the time, it was completely crashing. This was a hyperinflationary price depreciation. And I was buying at 30, 40, 50 cents. And it turned out to be one of the best purchases I ever bought. And this was October 1st, 2020. And it just prints. And that's what I'm going to expect of this protocol in the coming years. Um, and I could give a shit what the price is, because look, if I bought $10,000 worth, and let's give you a bigger number. If I bought $500,000 worth of Solid, and it's printing 1% a week, it's printing $5,000 a week, and Solid goes to 10 cents, and it's printing $5,000 a week. Do you give a shit about the price of Solid? Especially when the VE NFT is non-diluting, means you own the same governance rights no matter how much emissions are emitted. Now, persons may be questioning, with the front-loaded emissions, how do you incentivize positions? Well, here's what's going to happen, most likely. I got to connect the wallet. Give me a second. So here's a speculative roadmap for what will play out. Now, obviously, the other folks on SolidX, VDAO, ZeroX DAO, they'll have their opinions. And they're obviously they're biased because they created a protocol and their perspective is from their protocol. But I see their protocols what they are. They're a big deal. But they have the same freaking problems as every other protocol. What do you think is going to happen to VLSEX? I said VLSEX. Oh my God. So what's going to happen to VLSEX? It's going to get diluted. The position is going to get diluted. You're going to have to buy more and more and more in order to keep the same governance ownership. It's not It's a diluting position. It's not dilution protective. And that was the whole point of the E33. So you could have a position and not have to continuously be fighting to retain percent ownership of circulating supply, which is the burden of VECRV. And that's why VECRV is considered a non-effective position nowadays. Um, you might as well own Curve because Curve owns so much CRV. You might as well own SEX because SEX controls 10 to 1 solidly. You might as well own whatever the WEVE. It's going to control 20 solid. I don't give a shit. They can control how much ever they want. If I own 2% of solid supply, non-diluting, they can own a 10 million more solid, and I own 2% of supply, which means I have rights, I have purchased rights to 2% of any bribe that I want. And that's worst case because the odds are their votes are going to be split up amongst other things. So I own rights to this protocol's bribes. And that's a salary, and that's your paycheck, and that's your revenue stream. And that's what I see. I don't see a price of solid. I see the potential for solid inside of an Andre Cronje 4D chess implementation involving fixed forex, keeper, and Iron Bank, where Iron Bank provides options, structured products, and leverage on Solidly or whatever the hell protocol. Solidly is designed to be consumed by other protocols. And I see Iron Bank as a lending provider. I don't have an Iron Bank position. Can't own everything you want to own. I see fixed forex as potentially freaking used because we're talking about synthetic currency in a world that's starved for currency. Folks don't understand that Japan is in perpetual deflation. We have a global monetary supply that's disinflationary, and I'm not going to get into macroeconomics at this point, but we have a currency burden around the globe. And what happens is that causes misallocation of capital and it causes illiquidity in parts of the market that need it the most. So, what happens when there's a currency shortage? You get parts of the currency that are starved of liquidity, and if people start dumping, there's no liquidity to buy, and then a market blows up, and that cascades and cascades and cascades, and that's how the system explodes. This is what happens time and time again. All right, 5 seconds of macro. When I say the word disinflation for global money, I mean the actual currency in circulation, like currency that people have access to, and that's not like bank reserves and other shit and bonds and whatnot. It's circulating currency. But most people think of inflation with regard to consumer price inflation. And sure, we have a shitload of consumer price inflation. That's the case. It's very important that persons use the word inflation and deflation with regard to the particular market that they're actually discussing so that there's clarity in the message that's being conveyed. So what does this all mean? This means that fixed forex produces synthetic currency, of which is the most sought after asset, commodity on the frickin' planet. The entire status quo for the United States is the exporting of dollars. That's our biggest export by far. By far. And now protocols in the crypto space and the DeFi space have created the capacity to mint synthetic dollars from collateral, the same way the euro dollar system has been doing for however long it's been doing it for. It's the same exact process in almost all regards, except now it's disintermediated, it's decentralized, it's on decentralized networks that are resistant, censorship resistant, and that's meaningful. Um, Whatever, MetaMask is a centralized implementation, and that whole story is another complexity, but censorship resistant disintermediated networks, such as this damn network that we're staring at right now. Or if you go over to Fix Forex, I have it up here somewhere. This Fix Forex? No, that's Iron Bank. It's here somewhere. Yeah, Fix Forex. So this is big stuff, and it's not Ethereum. I'm not gonna. All right, I'll go there. Let me see. Let me just check on something. Let's go here. All right, so $2,000 in R Keeper, $1,300 in euros. I'm not complaining. Actually, $3,000 a month in euros. I gotta sell these for dollars. I should probably sell these for dollars because the euro is dipping against the dollar pretty hard. Let me talk about, let's hit some comments. I hope this helps, guys, because people are buying shit for the wrong reason in a market where you really shouldn't be buying stuff. And if you're buying and selling, you're doing it wrong. And this isn't huddle where I'm not going to sell it. I'm going to check back. No, you better have a goddamn good story to tell before you buy something. You better be able to sit down for 10 minutes and give a speech about what the heck you're buying, why you're buying, and what are you thinking? I mean, look, I sit down for 30 minutes, maybe more, 3 days a week, and I give you the speech of what this stuff is doing and why and what I understand, and I put it into context of macroeconomics, and it's a heck of a story. And that's big. This is big stuff. And people do not talk about the crypto space as it should be talked about. They talk about it with the perspective of other YouTube personalities that are a burden on society with the message and information they provide. Pat Mac, a pleasure. Dan, Booster, Cap, unusual event this morning that CVX unlocks everyone due to a bug fix. Are you going to relock all your CVX? I still have locked CVX. I maybe on the unlock, maybe I'll trim, but I think I have good exposure. I'm pretty content, and let it depreciate. It is what it is. I want my bribes, and the bribes will come in because of Curve, and Curve is needed to incentivize LP positions so that there's deep liquidity for protocols. So the bribes will be there. Where does one find more detailed information related to solid white paper? You go to Andre's Medium here. You go to Andre's Medium. Just go to andrecronj.medium.com and you'll see his shit. Now ask questions if you don't digest it all, but it's all there. And then you go to GitHub and you can look over the contracts. And here's his contracts, and you do some due diligence. Harjeet, hi Noah. I hear you speak about Popsicle Finance. I'll check back in Q3, Q4, Q1 2023. That's the deal. Next year. Haven't heard. How do you play solidly with 5 to 10K? You probably don't. Unless 5 to 10K is 5 to 10% of your portfolio. If you have a $50 to $100,000 portfolio, you can throw around 5% and see what happens in the coming years. Check back in the coming years. That's the bottom line. But if your entire portfolio is 5 to 10K, you're not playing with an asset like solidly. My recommendation for small portfolios at this time, if you have anything less than $50,000, is go completely risk off. Wait for the entire financial system to completely crumble and have the plumbing break and have a systemic liquidity event. And just imagine you have 50 grand and you bought Bitcoin at $3,000 in March 2020 when the system collapsed, and you held it and you sold it. You capitalized on the appreciation. You sold it at like $50,000, $60,000, and you made 15x on your money. You turned $50,000 into $600,000, $700,000. That's you got to wait. Smaller portfolios need to wait for the market to break. You're going to get screwed by altcoins. You're going to get screwed because everyone's thinking they're going to make money on altcoins in a goddamn bear market. That's not the way it works. You're going to get destroyed. There is no opportunity in these markets. There's opportunity if you have a clarity and a time horizon that's not of the typical mindset. You have to think different. And 5 to 10K is not going to do it in these markets. You might as well wait for the system to have a critical event, and you're able to get the hyper depreciation, and they'll end up doing. It's going to be some serious shit. I talk about micro financials all the time on Twitter, and there's some serious stuff going down where the Fed is stuck in the rock and a hard place of all time. It seems like Andre threw a fit because people were critical of solidly. Who cares about solidly the user interface? Look, you want routing? You go to Firebird Finance. There's your routing. What do you think this does? This is a third-party routing implementation that goes through. I think I'm on Ethereum mainnet. So you want routing, you go here. If I was Andre, I would have signed off too. I don't need to hear some bullshit like that. People questioning months of work in a ridiculous tokenomics. When I know monetary policy, I know monetary policy. That's the fucking craziest monetary policy I've ever seen. Price action invalidates a narrative. Okay, okay, yeah. So this is big stuff. This is routing. This is where you get routing, third-party providers. And that's the deal, Joe. Rotari, have you seen Taiki's bearish video solidly? Makes a lot of decent points with short, medium-term limitations. Well, bear in mind, if you look at the price action, Yeah, I guess this is pretty bearish, but look, this is going to be some wicks, and maybe this turns around. It's Taiki's on point. He's very smart. And what does bearish mean? Are you bearish or bullish with regard to price, or are you bullish with regard to the amount of money you're going to make on a weekly basis from a bribe perspective? So if you're interested in that, then you're probably not looking at price at all because you have a non-diluting position, and more so what you're looking at is transaction volume to assess the growth of the protocol. Um, Interestingly enough, what I would look at is the status of SolidX, 0x DAO, and 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 VDAO, because those guys are going to, at the expense of their tokenomics, are going to drive deep liquidity in these pools and are going to help capital flow. Ultimately, all bribes flow. You know, I said this the other day on one of the forums and it didn't get the best feedback. All bribes flow downhill to VENFTs because the bribes come from transaction fees, which comes from the volume through the network. There is no other exchange like that except Curve. But Curve is only a 50% revenue share. 50% of the transaction fees go to the ECRV holders, but with this exchange, 100% of transaction fees go to LP or to bribes on LP positions. So then you ask yourself, what incentivizes people to put capital into a pool? It's the incentive system. It's solid, and what drives up the price of solid is the bribes. So transaction fees drives the bribes up. The bribes going up drives the appreciation of solid, and the appreciation of solid increases the revenue for LP positions. So that's the feedback loop. And I think and the front loading of the emissions, I think, is interesting, very interesting, because farm and dump does exactly this, as the chart shows. I am damn excited when liquidity drives up. I am damn excited for emissions to dry up and transactions to go up. So transaction volume. So that's what I want to see. And that's it. And my position is sized accordingly. If it fails, it fails. Great. I expected it. I currently value these positions at 0. And what I do is I take my bribe revenue and I turn it into stable coins and I consider it my cash position. You need a cash position so you can make choices and optionality. So that's what you do with revenue. That's what Warren Buffett does. That's what I do. I'm a little, I'm, clearly I'm 0 compared to Buffett, but I'm doing the same thing that he does. Hey Noah, great work, sir. Thoughts on Powell's Q&A with Senate? Oh my God, that was the worst Q&A I've ever heard. Those are the stupidest questions, and they don't get anything meaningful out of him. Why don't they ask him about the burden? If I'm not going to get into macro, but he's in such a burden where there's no good choice. It's a stagflationary environment. If they raise rates too much, the whole system is going to collapse. If they don't raise rates at all, consumer prices are going to keep going up. But if they if they raise rates, that what does that do? That basically drives down the wealth of the general public, so making people poorer, so they can purchase less, more expensive goods and services by making people poorer. Oh my God, this is the biggest shit show I've ever seen from a financial perspective. What these people have created. Um, Did you end up deploying more cash with this dip? This is not a dip. This is a bear market, and I deploy cash when opportunity presents itself. I would love to see solid go down and test lows. Can you imagine 50 cents? That'd be really cool. That'd be a buying opportunity. And I have a healthy position size. I have no need to acquire any more. I have my NFTs from the first week, which is great. They're non-diluting positions. So if I take on a new NFT, I have to be considerate of the increase in circulating supply. But the front-loaded emissions, that's relatively high. So I am at a disadvantage with the quantity of solid I need to accumulate. Um, Thoughts on convex exploit? Not something that I could go into right now. How will these? How will VE solid won't be diluting? Will they get more solid? They will get more VE solid. Is there a button to claim? Unknown. We'll see in a couple of days. Revrati, can you buy VE NFTs on PainSwap? Sure. We'll see how that market evolves. It's the VE NFTs from the first week that matter the most. All CVX was unlocked today because of an issue with the contract. That's why it's dipping. Okay. Well, we'll see what happens. I still think it's the balancing deflationary force in the curve narrative. So that's a big deal. Can you explain the difference between the VE NFTs on PainSwap? Those are already made VE NFTs that probably are worthless. So you have to question whether you're making one or not. I don't know. I can't help you guys make choices on what not to purchase or what to purchase. All I could do is sit here and tell my story about why I do what I do. If you had a few 300K in ETH, would you risk off or just hold it? What you need is a properly balanced portfolio of risk that manages risk. And my sentiment is with youth, you could have increased risk exposure. I expect the financial system to break at some point for a variety of reasons that I've discussed, which entails you need optionality, you need liquidity, you need a cash position to be able to take advantage of collapsing markets. But there's also a great deal of rational reason to have particular positions. And I've been able to justify about 65% risk on, 35% risk off. If I was older, I'd probably be 65, 35, 65% risk off, 35% risk on. I'd be skewed differently depending on my age category. So it is not easy, soon. It certainly is not. And in the end, I tell my story, everyone will have to tell theirs. Andre's in the house. Greetings from Germany. Always a pleasure. James is in the house. Mind bending content as always, my man. Thank you for always sharing your opinions. My man, we started together, by the way, so it's all good. We've had a long road, and I'm happy to clarify these markets, which are just almost impossible to understand. And the only reason I understand them is because I understand macroeconomics, monetary policy, macroeconomics, and monetary policy. Big period there. Uh, Nick, Dean, man, have you taken a look at Platypus and Avalanche, stablecoin swapping? Yeah, you can't own everything you want to own. Quick question, Cap. Why have you chosen the allocation bribes 100% to Tomb? Because Tomb pays. Let's take a peek. So when was the claim? On Thursday? I'm on the wrong RPC. 1 second. Let's go over to here. Phantom 2. RPC fails on that Phantom. RPC fails on this Phantom. This website sucks. So 214. So that's $400 give or take. RPC stocks 213, 352, 213, 207, 449. It's over 1,000. What's that? Like 2,000? A little over $2,000 since Thursday. So yeah, I'm just saying. I'm just saying. I'm certainly not complaining when I've already considered this position a purchase and it's worth zero. Meaning, if you have 10 grand and you buy a VNFT, it's done, it's gone. You have zero. That's the mental perspective to have. And you are speculating that the sequence of events, the flow of capital, is as I've described it. And I see, obviously, everything that I've described as rational, quite reasonable, logical, sequential. It makes sense. If this shit keeps going up, if these numbers keep going up, because as you can see, they are going up, people are going to want to buy solid. I mean, I have a capacity to gain access. This is $30,000 for the week, and it's not enough. I could get about I could get about 20%, almost over 10% of it, but that'd be only about $5,000. So if I could get $5,000 a week there, I could get more capital here. And that's what I'm interested in. You find the position that's based on the amount of votes that gives you the most capital. And there's going to be risk here because I expect this to continue to depreciate, even though they have a large. But look at this. Look, they have these boys, 0xD, SEX, and WEDE. They have the largest quantity of solid that they've been touting. Yet Tomb has the largest votes. So my expectation is those initial airdropped NFTs, they're going to find a lot of competition with the general public and other actors. Not everyone locked their NFTs with those protocols. Look, who came out ahead? The one who bribed over $1 million. I don't know. We'll see what happens. Appreciate everything, Trevor. You're appreciated as well, my friend. Why are the first week's NFTs more important? Because they're non-diluting. Let's just say if there was a one, let's say there was a 100% increase in circulating supply from 20 million to 40 million, and I had 50,000 solid week one. I have 100,000 solid week two because there was a 100% inflation rate in the first week's emissions. But my VENFT, it has the same percentage ownership of all circulating supply. It's non-diluting. If I wanted to buy solid now and lock it up, why is it worse? It's not because of the depreciation. So people can actually edge me out on a position. I bought early somewhere in here. Bought a bunch of times, but that's besides the point. You would have to have twice the amount of solid that I bought in order to have the same voting weight because of the emissions that have gone into circulation. Hope that helps. Any thoughts on Web3 entities blocking users in relation to sanctions? Yeah, Ledger and Ledger Live works fine for sending and receiving, and Ledger. You could use your Ledger directly on almost all the important exchanges. Curve, OneInch, Parasop, they all have direct ledger support. So who uses MetaMask? I use MetaMask because it makes operating the ledger convenient for changing gas and whatnot, but that's getting better over time. Celsius X, any opinion on what's being built by the Celsius team? Yeah, something freaking massive, which is why I took a cheat out position. Uh, that's it. That's big stuff. That's big stuff. They got 20 billion assets and they want to put it to work. And the only way to put it to work is to print euro dollars. To clarify, that's basically CDP stablecoins, where you take collateral and you're able to mint a stablecoin that has a dollar value and use that to participate in the DeFi space and extract revenue. And that revenue goes back to the depositors of the collateral assets with Celsius. So they got big plans. And I think that is a heck of an initiative. Mad Hatter got it. It does. Thank you very much. You're welcome. You're welcome. Why ain't you staking CVX FXS? I'm waiting. I'm in no rush. I would like to see if there's a single-sided CVX FXS position comparable to CVX CRV. We will see what happens. So essentially, if price goes down by 50% and inflates 100%, is the same buy. Uh, yeah, yeah. So if there's a 50% dip in price from $6 to $3, and there was a 100% inflation rate, you got that 100% in a week in inflation, and then the rest of the community has to fight over the increased circulating supply. So this it's a very 4D chess trying to understand the monetary policy. But I'm a sit back and relax kind of guy. I should have waited maybe, and I would have had a larger ownership of circulating supply. Probably like 10, 15, 20%, give or take, depending on how you crunch the numbers. But that's okay. What I did is I understood what the hell is going on, and I have a better and more clear understanding of what's going on as time passes. There is no money left. If you bought a VENFT, it's zero in your portfolio. That's what folks need to understand. And before you get into a position, is that something you're interested in purchasing? Because it's not a position. Flip the narrative. Friday, March 4th at 12:29 p.m. Thank you everyone for joining me. As always, tell everyone to subscribe. After party on Discord. You can see the link probably in the comments of this YouTube video, otherwise in my Twitter profile. NoahSeidman.com. If you have any questions, I'm more than happy to help anyone as time permits. You're able to make a calendar invite directly on the website. Wish you all a wonderful weekend, and I will see you again on Monday.